Greetings, accounting students. This is the second clip that I've done on profitability. So you can check out my channel to view the one on the net profit margin that I completed recently. So as iterated in the NPN clip, when we think of profitability, be mindful that we're comparing a profit figure to a base figure in the denominator of our formula, such as total assets or total owner's equity. And just to provide a bit of structure in our explanation of a profitability ratio, we take an ABI approach, we analyse our figure, we benchmark it to give it context, and we interpret it by unpacking and explaining the meaning based on the information that we have at hand. So in the Unit 3-4 course, you won't be required to calculate a profitability ratio on an exam, but still useful just to basically develop your grasp of the meaning of this, particularly in relation to the numerator and denominator. So we start with the fraction here. Let's just work with these figures in front of us. So we've got our numerator in 2024 of a 400 grand profit divided by a $3 million total assets, average total assets. If we calculate that as a percentage, we get 11.3% in 2024. And then in 2025, apologies for the mess here, same deal. Our numerator is our profit, 450K, divided by our base figure, the denominator. Now we're up to 4 mil in year 2. And if you punch that in on your calculator, you should get a percentage of 13.3%. So not for the first time on this channel, an apology for being text heavy on this slide, but just to illustrate the ABI approach that I'm encouraging, let's start with the A. So we look at the formula, which will be provided in the exam scenario. And we start with the denominator. For every $1 of the total assets, so our denominator of our formula, we have X cents, in this case 13.3 cents of our numerator, net profit. Then we benchmark it to give the ROA context. So in this case, we can do a trend analysis because we can compare 2025 to 2024. So we've gone down, we've decreased by 2%. Then we get into the interpretation. So a point of emphasis is we're certainly going to put a bit of weight on the fact that this is an unfavorable trend because we are less profitable based on the 2024 to 2025 trend. Then we want to explain that net profits actually increased. So let's just tidy this up. Net profit has increased by 50K over the year. Now that's a good thing in terms of our income statement. Then we need to explain why this ratio has in fact decreased. And so it's pretty obvious in this case that let's just tie this up again. Thank you. That we've got a major change in our asset structure from 3 mil to 4 million. So we need to be a little bit careful in the way we unpack this. We don't want to say that net profits declined because that would be incorrect. So we talk about this in a proportional sense. So therefore, as I've got on the screen here, we've had a $1 million increase in our assets, and hasn't been matched by a corresponding increase in our net profit of 50K. So therefore, we're not using our assets as efficiently as we were in 2024. Now, we don't have information here, so we can just speculate that probably what's happened is we've had a recent acquisition of a significant NCA, and so therefore we're yet to realise the benefit of that asset.